The chart is telling us that we're already going down into the 40s. Of course, this chart pattern says that, but there might be a piece of news that is going to kind of trigger it to make that unfold, and then everybody will blame it on the news. But the charts are already pointing to, $45 per barrel, and we just have to let the markets unfold and let that happen. Obviously, if there's some type of war, some type of escalation, then oil and gold itself could both pop and rally. But forget the news that is unpredictable. We don't know what's going to happen. We don't know when it's going to happen. You just got to follow the price charts, and oil is still in a downtrend. If we take a look at the daily chart, obviously we went into this downtrend. The market was selling off, trying to figure out if it was going to hold. And we still are waiting to see if this is going to hold into an uptrend, and if this is going to eventually roll over and potentially break down, or if it is going to extend and shoot higher for a holiday rally. Now, when we look at the 30-minute chart and zoom in here, we've gone from red bars, and we've gone from a volatile time where overbought market conditions, where we had FOMO buying, and then of course it would sell off, and then we went into a panic selling phase, and then we rallied back up. We got into FOMO through here again, and we continue to see the market push higher. We went into an overbought price action with not only price action pushing higher, but also we had FOMO, 3 days of FOMO back to back of people piling in. And usually when we have, if we are in a downtrend, usually when we have FOMO, the market sells off, but we keep pushing higher, telling us there's some pretty strong momentum pushing into this market. And you can see our trend analysis went neutral from red bars, so from a downtrend to neutral. And over the past 2 sessions, it has turned green, saying the short-term momentum is actually going bullish. The 20-day was sloping down, price was below it on average. Now the 20-day is sloping up, the 20 period, and we're seeing price hold above it. And so that is an interesting indicator that we are very close to potentially this market kicking into high gear and having another expansion to the upside. So we're just going to have to wait and see. We do have some interesting price action with the precious metals space, especially silver, which I'll touch on that in a minute.
Zooming into shorter time frames reveals a roller coaster of emotions. Fear-driven sell-offs followed by bursts of aggressive buying. Overbought conditions triggered rapid pullbacks, but each wave of panic was met with renewed enthusiasm, forming a pattern of powerful rebounds. Intriguingly, the latest surge in FOMO buying did not produce the typical decline associated with downtrending environments. Instead, prices continued lifting, signaling underlying strength. Trend metrics flipped from bearish red to neutral, then finally to green, evidence that buyers are gaining control. This subtle shift suggests that a broader bullish transition may be underway, though confirmation requires sustained follow-through.
But let's go take a look over at the Magnificent Seven real quick. So we've got the mags. When we look at them as a basket as a whole, and we just kind of look at price, they have been in a 3-wave downtrend. They've bounced up on as a whole. They're stuck kind of at resistance. You could almost argue that this could be potentially a head and shoulders formation, a neckline here. They're definitely at a point here where we need to see if they're going to extend and push higher, which will drag the indices up and probably kick us into an uptrend. Or is it actually going to stall out and roll over and then break down in a big way? Now, when we dissect the Magnificent Seven, we look at NVIDIA, it's struggling. It's not really finding a whole lot of love here. It's just been down we got a lot of red bars. We got some heavy volume selling. If we take a look at Microsoft under pressure as well. It's in a clear downtrend. It's bounced into resistance. So pretty critical turning point for there as well. Now, Apple's bucked the trend. We're hitting all-time highs with Apple, and I think Apple has gone. We're seeing Apple push higher. It's doing some of the heavy lifting for the indice or for the group of the Magnificent Seven, and of course, it's bucking the trend and pushing higher. Google as well. We've got Google pushing higher. It's holding a nice bull flag pattern, looking like it wants to pop and push up. We definitely have some big volume here, which is interesting. There might have been some news obviously around there, but overall it is holding up, and it rallied on strong volume, and it's pulling back or pausing on lighter volume, which is a good sign. That's actually a bullish type of volume that we want to see if price is going to go higher. If we take a look over at Amazon, it has been struggling. It had a huge pop to the upside, got hammered with some heavy volume selling. It's bounced up kind of right back into kind of resistance, right into these highs here, this big gap window. Overall, it doesn't look the strongest at this point, trying to figure out what it is going to do. Now, Amazon's come out with their new They're talking about their new video card for AI. That might have been what some of this pop and this volatility is. How real is it? How well is it going to work? But supposedly they're still far from getting highly adopted by others because there's not a lot of libraries for people to easily install and start to use the video card yet. But Amazon is saying it's better than NVIDIA's card. So it's going to be interesting to see how that unfolds.
The market's most influential tech giants, often called the Magnificent Seven, are displaying mixed signals. As a group, their recent recovery has stalled at a critical resistance zone, forming a structure that resembles a potential topping pattern. Individually, momentum varies sharply. NVIDIA continues to struggle under heavy selling. Microsoft faces similar pressure after rallying into resistance. Meanwhile, Apple and Google stand out as rare sources of strength, delivering fresh highs and stable bullish formations. Amazon's volatility, boosted by news of its new AI-focused hardware, raises questions about adoption and competitive viability. Tesla and Meta remain under strain, adding fragility to the group's overall posture.
If we take a look at Meta, clearly in a downtrend, it's had a little bit of a bounce, trying to figure out if it is going to push higher or if it is going to stall out. And then last but not least, we have Tesla down as well. It's bounced up to resistance. Again, there's only a couple stocks that are really trending higher in the Magnificent Seven. That's really just Apple and Google. It's not a good sign. If the market does roll over here, it could sell off fairly big. So let's take a look at a couple defensive plays. We've got the bond market, long-term bonds holding sideways. You could argue this is maybe a head and shoulders formation. Maybe it's going to unwind and fizzle down. We'll just have to see. If we zoom out on this, you can see, let me just clear it up a bit here. Long-term picture, bonds are clearly in a downtrend, still trying to build a base. If we zoom in to the most recent price action, it has rallied up. It's kind of trading sideways. The 150-day moving average is sloping up and sideways. It is kind of in limbo of where it is going to go. You know, the rounding formations come down. Now it's kind of moving up and it's kind of flagging sideways, trying to figure out what it is going to do. But there's a lot of wild cards here. We got some huge volume, which telling us there's definitely something going on. And usually that means there's going to be some big move here shortly. So we just need to figure out, I would let it be. I wouldn't touch it yet. Bonds have a lot of work to do really to turn and trend higher going forward. If we take a look at the dollar index has been moving down for the last year or so. It's trying to build a base, has been pulling back quite a bit, which is helping, I think, push gold and silver, precious metals higher. So we're definitely seeing the dollar move lower. You could still argue here that it is it's in this uptrend. Now it is trading sideways, trying to figure out what it is going to do. And if we were to just kind of draw this level through here of where it's kind of consolidating, you can see it's at a pretty critical pivot point. It's trying to get above and hold above this pivot high, and there's a lot of volume through here as well. So if it does start to break above these highs, it could really start to extend and take off. But it's still in this, I think, kind of bottoming formation, trying to figure itself out. And I think if it was to break this set of highs here, this little potential double top, or whatever we want to call it here, if it can break that, I think we could be off to the races. But at this point, it is testing, testing support and pulling back a little bit. Let's take a look over at precious metals. We got gold up 0.75% this morning. Gold having a nice push higher. It's holding above this high over here. A nice little bull flag. Again, the analysis on gold has not changed for a long time. We had our initial move up. We've got potential to about 51, 5,200 per ounce. If we tend to see gold and silver really rocket higher and outperform here, that is screaming more and more of a warning sign that the major stock market top is nearing or is in. So if we see gold and silver really take off and outperform the stock market, that's just going to bode, really signal that I think the end is coming. The music is about to stop for the economy, for the stock market, and all of that going forward.
Defensive sectors are offering few clear signals. Long-term bonds continue to drift sideways, creating a broad base, but lacking conviction. Heavy volume suggests institutional repositioning, yet direction remains uncertain as yields stabilize. The U.S. dollar index, after a year-long decline, is attempting to carve out a bottom. It now sits at a structural pivot that could either ignite a renewed uptrend or fail decisively. A stronger dollar would pressure commodities, but its current weakness is fueling demand for gold and silver. Traders are watching closely as these macro forces converge, setting the stage for potential volatility across global markets.
Now, if we take a look over at silver, up 1.25%, it has had a very nice pop and breakout. Now, it's a small market. It's highly watched. Lots of speculative people in on this, which is, I think, why we're seeing a huge chunk of such a huge, strong move. My upside targets are like 62, 72, and then about $80 per ounce. So silver could be have a very big move still. And we've talked about this a long time ago and many times that silver had potential from this pause that it's at to move potentially 50, 60% to the upside. Gold could move up about 25 to 35%. And I think we're just starting to get the start of this move right here. Let's take a quick look at Bitcoin. Completely out of favor, oversold, down into support, having that volatility. I've been away in the UK for about a week or so, just relaxing and doing some cooking classes and touring around with my wife. But nothing has really changed. Everything is unfolding as we expected. The stock market is still trying to figure out, is it going to start a new uptrend or is it going to break down? We've got precious metals firming up and moving higher, showing there's increasing fear in the market. We've got this bear flag and this kind of high volatility bottom and bounce in Bitcoin that we expected to have some type of bounce or pause before it potentially goes much lower. So nothing is really out of the norm. And this is why you don't need to follow, if you follow the proper kind of time cycles and charts, you don't need to follow the markets every single day. You just let the markets unfold. We're not day trading here. We're looking at overall cycles and bounces of momentum. And of course, it takes multiple days, usually multiple weeks, for each phase and each bounce to roll over and do its thing. So everything is just continuing to mature and just kind of moving in the direction we've expected. Expect some type of volatility, bounce, or pause at this point, and Bitcoin is still pointing to lower pricing going forward. If we take a look at crude oil, it continues to just fade and grind down. Again, no real excitement here. There's the critical level down around this 56, 57 for oil that if it was to break that level, just go to the weekly chart real quick, I think it's going to wreak havoc on the market. I think we could see a very big drop down into the mid 40s, potentially even lower than that if this breaks down. And I think there's going to be eventually some news that's going to kind of break the trends. The chart is telling us that we're already going down into the 40s. Of course, this chart pattern says that, but there might be a piece of news that is going to kind of trigger it to make that unfold, and then everybody will blame it on the news. But the charts are already pointing to, $45 per barrel, and we just have to let the markets unfold and let that happen. Obviously, if there's some type of war, some type of escalation, then oil and gold itself could both pop and rally. But forget the news that is unpredictable. We don't know what's going to happen. We don't know when it's going to happen. You just got to follow the price charts, and oil is still in a downtrend.
Gold and silver are displaying renewed strength, reinforcing their role as early warning indicators. Gold's steady climb above key resistance resembles a textbook bullish continuation pattern, with long-term targets extending far beyond current prices. Silver, a smaller and more speculative market, has broken out sharply, accelerating faster than gold and suggesting mounting investor anxiety. Large upside targets remain possible if momentum persists. Historically, precious metals outperforming equities often foreshadows trouble for the broader market. The message is clear: risk aversion is rising, and investors are seeking safety as economic uncertainty intensifies.
And last but not least, we talked about this XLE, this energy trade, months and months and months ago. We had big divergence, meaning we saw energy stocks moving up and to the right. We see crude oil moving down to the right. So, oil pricing is going down, yet energy companies' stocks are still going up. It's a big divergence. Typically, if oil is going down and going below production costs, yet companies' stock prices are still going higher, that's usually not sustainable. We did have this crack to the downside. Now we got this grind and fade back up into resistance, which I do believe eventually is going to potentially be a very nice big play to the downside, where we see a big waterfall sell-off, which would coincide with oil breaking down below that $56 per barrel level. We've been watching and waiting for a trade in this for a long time. I know we talked about it when it was up here. I know some of you traded it. I know we talked about it over here, and some of you did very well. And we're waiting. I've been always waiting for the breakdown and for the markets to stall out and roll over. And then we play an inverse ETF, like ERY is an inverse leveraged ETF that if this does break down, these are big cycles. If you notice these cycles on the charts, they're big. They're multi-month cycles in the market. And so we really have to let them unfold and not just jump the gun before the cycles unfold. You have to let trades come to you. You have to let them unfold. You don't just take them because you see something potentially coming down the road. You still have to wait, because I know a lot of you actually bought the inverse ETF over here. And of course, it is dramatically higher. It's like a 2x, 3x ETF. You're down 20, 30% on those plays, anticipating the market to go down. You really have to let these cycles, these big waves. This is a weekly chart, keep in mind. That's why it's hard to see these, but these are multi-month cycles that are playing out. And if we start to see a breakdown here and a bear flag, and we have a sell signal in the stock market, we could potentially, depending on how it goes, we could have a sell signal over here and play an inverse ETF. But I'm not in a rush to play an inverse ETF because the long-term stock market trend is still up. And we're having this big consolidation that the stock market could just consider moving higher here and pushing up. And we want to make sure we're not inverse, we're not short the market. And we want to make sure if it does break and start to run, we want to be on board and be long, not net short.
Beyond equities and metals, other asset classes are shaping the market narrative. Bitcoin continues its decline, approaching major support levels after a period of extreme volatility, yet still following expected cyclical behavior. Crude oil trends steadily lower, with charts warning of a potential collapse into the mid-$40 range if key support levels fail. Such a decline could have widespread economic implications, especially for energy equities. Despite earlier divergences where oil fell while energy stocks rose, conditions now appear aligned for a significant correction. Multi-month cycles across markets continue unfolding naturally, reminding investors that patience and discipline are essential in navigating major turning points.